So some specific commodities. So iron ore. Iron ore is probably the worst placed of any commodity in this transition, I think. Peak Chinese demand is just an enormous headwind, but it's not the only one, unfortunately. Part of the transition for China to from this highly high-powered, high-growth model to where they're going to end up, which would either be a consumption-led developed economy that was growing at kind of 3%, or something closer to Japan or Japan-ish, because China, as I said, is a lot less rich than Japan ever got to. Something more like a middle income trap, where they're just struggling to grow the entire time, got an immense debt problem, and they still build to keep things kind of going along, but they just can't build like they used to. And that's probably the base case, I think, for China.
Well, and the other thing is, it's not productive.
And it's not productive. That's the key right there. It's not productive, but they will try and make it productive where they can and around the margins. And one of that will be the rise of scrap steel, which is a natural kind of progression for steel in any developing economy. So, they're on the record saying they're going to get scrap to, I think it's 250 million tons by 2025, I think was in the last 5-year plan, and then much higher than that after that. So far, they're completely failing, I might add. At the moment, in fact, steel recycling has almost become a kind of swing marginal price setter in steel in China, which is quite odd, but that's what's happening, where when the price crashes, they immediately shut down all their electric arc furnaces. I thought this was related to the coal price and electricity price spikes, but they've diminished, and yet it's still happening. So we'll see what happens there. But nonetheless, the CCP has very steadfast policy mechanisms to try and drive up the use of steel recycling or recycled steel. Moreover, the natural course of an economy like this is, as they start to age into being developed, then they have a lot more steel stuff that naturally is recycled. So I've got a chart here from McKinsey showing, the availability of steel scrap building in China into over the next kind of 10 years or so. And as you can see, it will double virtually.
And actually keep in mind as well, that's starting from starting for as well from a higher number. Like you've got the home and the prompt ones. So that obsolete stuff of the steel that's just being from other buildings effectively that are basically, you used to knock down a peasant's hut and put up an apartment building.
But soon you'll be pulling down an apartment building and putting up another one.
Yeah, arguably for some of those, they actually use less steel now than what they used to use.
Although I have read some material saying that they would want to move away from concrete because it's quite environmentally damaging.
Okay.
And so you could actually end up with one possible mitigating factor is if you've got a lot of recycled steel, it's more environmentally friendly to use more of it instead of concrete. So there are pros and cons in that. But we're not only going to have peak Chinese demand, we're going to have this push for scrap. And what that ends up, if we just flop over to the next page, the cumulative loss of iron ore demand, this chart flops around a bit. At various times I've had it as high as like $500 billion by 2030. But at this stage, it's like around 350 million tons of steel demand gone in China, which is like 500 million tons of iron ore if it's all come out of pig iron production. So it's unbelievable, and that's just demand. Then on top of that, on the supply side, you've got more scrap, and then of course you've got Simandou, which is underway and supposed to come in just 2 or 3 years. That's like another 100 million tons of iron ore. And you've got Vale supposed to push up back towards 400, and so somewhere between another 150, 200 million tons. That's before you even talk about Australia. And there are some supply plans in Australia as well, and the numbers just get completely out of hand for iron ore surplus. with these things. And I might add that cumulative loss of iron ore demand is based on conservative assumptions: 2% fall in steel demand a year and 2% rise in scrap. And scrap is rising at 5%, and steel is falling at 4% at the moment. So you can come up with scenarios that are much, much, much worse. But the bottom line is iron ore, it looks like the great iron ore reckoning is here. The huge blow off in prices to $250 last year looks like it was the mania of all manias. And the trend and macro drivers of this now are really, really poor. So what lies ahead is a return to the cost curve, and starting to knock out the expensive providers of iron ore almost as far as the eye can see. Now, obviously, there are ebbs and flows within that, within the cycles, but that's the long-term structure of the iron ore market. So I'll throw you copper, Damo.